Hey everyone. So the stock market is doing a lot of this down, 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 down forever. Why is it doing this? So, hey everyone, welcome back to my channel. It's Nazak with Arshia, back with another video. I hope you all are doing well. And before we get into this video, I want to say I'm not a financial advisor, so please do your own research before taking part in any investment scheme. Let's get into it. Okay, so do you guys want the good news or bad news first? Let's just go with the bad news first so we can get it over with and be happy in the end, right? All right, okay. So stocks finished lackluster this week because US stocks fell and bond yield rose as new data on consumer sentiment was slightly below expectations, raising fresh questions about the pace of economic growth and the inflation outlook. By the way, I want to interject, though this is not related, but I have been having a lot of exams, so I'm not able to post a lot. I apologize for that. I will be back soon. So the S&P 500 dropped 40.76 points to $4,432.99, pushing the index into the red for the week. The Nasdaq fell about 137.96 points to $15,043.97, and the Dow declined about 166 points to 34,584. So that's the bad news. And what's more on this bad news is that all of this is happening because of the September effect. And we know the September effect is basically like investors change in behavior. Some go on vacation, some raise money for taxes. So people are buying, selling. It's really mixed. And people are selling to create their new portfolio for the winter or something like that. So it's basically changes in investors' sentiment. So Friday's session also coincided with something called quarterly quadruple witching, which is like also coincided with the September effect, which made it worse. It's a quadruple witching event on Wall Street, where individual stock options and futures and index options and futures all expire on the same day. So the occasion typically has brought additional volume and often some volatility, especially in the days leading up to it in the run up to market close. So like after this one, I'll explain more on quadruple witching. I've got like a little Investopedia thing here, but I'll just continue on. So latest set of the US economic data out Thursday painted a more upbeat than anticipated picture of the US consumer. August retail sales actually had a surprise increase as consumers turned back towards good spending among the latest wave of the Delta variant. And while weekly new jobless claims rose in the Labor Department's latest report, the level of new claims still held near its lowest since March 2020. Yay! But the data will ultimately factor into the Federal Reserve's latest assessment of the economic background at officials' next monetary policy setting meeting next week, with investors focusing closely on the Fed's timing to announce plans to begin tapering its pandemic-era asset purchase program. Sorry, guys. I get parched talking. Okay, so let's just explain the quadruple witching effect. So basically, quadruple witching effect, it refers to a date on which stock index futures, stock index options, stock options, single stock futures, they all expire simultaneously. Don't ask me why. It just happens. So while stock options, contracts, and index options expire on the third Friday of every month, all four asset classes that we mentioned like a few seconds earlier expire simultaneously on the third Friday of March, June, September, and December. So this unfortunately coincides with the September effect, which just makes the stock market. But the key takeaways are quadruple witching refers to derivatives of stock index like on a specific date expire simultaneously, And quadruple witching days witness heavy day trading volume, in part due to the offset of existing futures and options contracts that are profitable. So while it may result in increased volume and arbitrage opportunities, quadruple witching doesn't really translate to increased volatility in the markets. Don't get the market wrong, but this is just my opinion. But I feel that quadruple witching doesn't necessarily translate to increased volatility in the markets. So here's the good news though. There's first good news. We know that investors are worried and rattled and scared because the green index and LD indexes are just flashing fear, fear, fear. But here's the good news. Experts say we're still okay. Looking at the big picture, stocks are still near record highs. The S&P is just about 2% below its all-time peak. So what's going on? Investors are in a holding pattern. Many expected the Federal Reserve to be ready to announce a rollback of its emergency stimulus next week. But after a disappointing August jobs report, that seems less likely. So inflation also appears to be taking sort of a little bit of a breather break. And I agree that inflation has to go. Let inflation retire. Let her enjoy her drinks and her sunset in the Caribbean. Just let her go. Consumer price inflation came off a 13-year high in August, according to data released earlier this week. It came off its 13-year high. Woohoo! You guys should be happy. I am happy, of course. So consumer sentiment is improving again after falling off a cliff in August over Delta worries, according to preliminary data from the University of Michigan. But in the end, experts say the best thing you can do, keep your money invested. I agree with that. So thank you guys for watching this video. I hope you enjoyed this video. Please be sure to like, comment, subscribe, comment powder puff below if you made it till the end. And thank you so much. See you in the next video and see you on the moon. Bye bye.